What is going on? It is Nate. Today we are going to be talking about the benefits of managing your money, having a short-term strategy, a swing trading strategy versus something like a long-term investment. And I know they're not necessarily in the same category because, someone who's doing a long-term investment probably isn't going to be checking it on a daily basis. You're probably not going to be going in and out of the market. You're probably just going to be buying something that you plan to hold for years, right? And so I'm kind of just going to touch base on how if you have the time, from 6:30 to 7:30 in the morning to, check your investments and make adjustments if needed, kind of the difference you can make on your overall performance with your portfolio because there's many benefits to swing trading. Obviously, it takes more time. You're going to have to be buying and selling on a regular basis. It's not a buy and hold and check on it in a few years. But the returns you get are crazy. You're going to get far better returns. But then what I really wanted to touch on is the downside benefits. When you're in a market like this market, I kind of wanted to touch on, how that affects me, how someone who's trading my strategy, how we are handling this situation, and kind of comparing and contrasting. I know there's a time and a place for both. I know, if you're older, you're not going to be, actively swing trading with your money. You're trying to retire, you have to be a little less risky. But for someone who's younger, or if you have extra money laying around, the returns you get from this are really crazy. And the downside risk is really, in my opinion, it's less risky than long-term investing. Obviously, you have to know what you're doing. You need to have a strategy. You're not going to just going to be guessing and checking. But if you know what you're doing, your risk is going to be lower. And I'm kind of going to explain why that is. I truly believe it's less risky than long-term investments um, if you know what you're doing. So first things first, let's just look at the overall market. So this is SPY, right? The S&P 500. So this is the 500 biggest companies in the U.S. market right now, and this is kind of how I track and how most people track the overall market, right? This is usually, most of the little stocks or the other stocks you're going to see, Apple, Microsoft, Nvidia, things like that. They're all going to follow this same pattern. So looking at this kind of allows you to gauge, okay, how are the top 500 companies doing? And as you can see, we're down, pretty miserably the last month. From here, we've kind of just been falling, right? We were up at 613, and we fell as low as the 480s, right? So that's a really big, I mean, that's almost $150 move, which, if you have a lot of money in here, you have hundreds of thousands, you have millions, you're down 20%, right? You're down a couple hundred thousand, obviously adjusted accordingly for your account size, but things aren't looking good, right? And so if you're one of those people, I'm not here trying to like rub in your face. I'm just here to show, because a lot of people tend to say that swing trading, stuff like this is risky, but I'm going to explain why it really isn't even close to as risky as that. So let's just kind of flashback, right? So this is uh end of 2023, beginning of 2024, right? So this is about a year ago, year and a half ago is where, over where my cursor is over here, that's this time frame. Each of these is a day, right? So since this point where we were at 480 on January, beginning of the year last year, 2024, we have been going up since then, right? A pretty steady increase. We've had some dips, but it's been a pretty uphill, grind since then, right? So people's accounts went from, if you bought SPY at 480, now it was up to the 600s, right? So you're up really good. You're up, 20% roughly, just quick math. But what happens when it falls, right? Just in a matter, in 1 month, going from here to here, right? This was, I don't even know how long this was. Yeah, about a month and a half. We lost about 22%, which completely wiped out all of last year's gains, right? So in 1 month, you just wiped out 12 months of inclining, gradual increase gains. And, what a lot of people are going to say is, oh, well, it's going to go back up. And yeah, you're exactly right. But let me tell you how I differ from this, right? So if you, say you were doing long-term investments, you bought it here, just hypothetically, you bought it at the beginning of last year and you held it all the way up. You're like, wow, I'm up big. And then it drops, right? And so now you're back where you started. And now you're saying, oh, well, it'll go back up. Okay, well, you just erased a whole entire year of investments, right? You just erased that. Is the market going to go back up? Is it going to recover? Yes. but you just lost out on a whole year time frame of gains versus someone who is doing, a swing trading strategy like mine. We're not holding our positions from here. We're making that money from here. We're selling. We're making it up here. We're selling. We're making it all the way up here, right? So we've secured all of these profits. All of these profits are reflected in our portfolio. And then the market right here, look, right here, the market falls below the moving averages. The moving averages start declining. The moving averages start to, the 10-day goes below the 20-day, right? So it's a declining market. I lifted my risk here. I went from about a half to a quarter percent to a half to a percent risk during this time period where we were kind of sideways, to now risking a quarter percent on any trades I do take. But realistically, you're supposed to, once these moving averages cross and we're below them and they're declining, you're supposed to just not trade at all, right? So instead of not trading, I just decreased my risk to a quarter percent. And so I still was making money all through here. I was up about 2% on my account through this. And then this week, when we hit this moving average and then fell back down, I got stopped out of a few. And so I ended up down 2%. And since then, I've been cash. So, most people are down over 20% at this point as the market continues to crash. I'm down 2%. And so now, guess what game I'm going to play? I'm going to play wait, right? Sit and wait. So now I have, and this is by no means, I'm not trying to like brag about my situation. I'm just here to inform you. I'm going to have at the start of the bull run 20% more money than everyone who just bought and hold, right? Because you guys aren't buying, like you may be putting new money in there, right? If you put a percent of your paycheck in there. But overall, compared with your overall account value, if you're down 20%, you have 20% less capital to use on this next run, right? Where I'm down 2%. So I have 18% more money in this next run if it doesn't fall anymore from here. So, not only did I secure these gains over this time, you're securing all your gains as you're, making the gain. But then when you fall, you're only falling, 1, 2, 3, 4% max. And then you just watch it fall off a cliff, like literally just watching it fall. And then when it turns around, I still have 95% of my money plus, for me in my current situation, 97.5% of my capital ready to deploy once it turns around, once it shows that we have strength. And so that's the difference. Is people say, long-term thing, long-term investing is safe. It's safe. Well, why? You're just buying it and hoping for the best, and you're never going to sell, right? So you had all these gains through here and you're just letting it be. You're just, it's going to go up and up and up. And now you just wiped out a whole entire year of gains versus someone who's trading a strategy like mine. You have all these gains and you're taking all that money. You have all that money in your, cash in your portfolio now. And then the market drops and you're still cash. You're fine. And then from here, I will be buying once it shows strength and I will have 97% of my cash ready to deploy. So it's like, it could be safe because you don't have to check it every day. You may not be losing trades because you don't have a stop loss. You're just letting it go over time. But the growth of actively swing trading versus a long-term investment is exponential because on the downtrends, you're down 20%, I'm down 2%. And on the uptrends, it was up 20%. And on an average return of a run like this, you can easily get 200% on your account. So not only is the upside far greater, but the downside is far less extreme. So, it really comes down to, is it that risky to swing trade? Because I follow proper things, right? If you're doing a long-term investment, you don't have a stop loss, right? You probably just bought this S&P 500. You don't have a stop loss. So this could fall to $300 and you're still in it, right? You're down 50%. That's riskier than me. I'm only risking 1% max per position. So, I guess it kind of comes down to your perspective, but I just kind of want to come in here and say, if you have that 1 hour a day, 6:30 a.m. to 7:30 in the morning, you can literally change your life because you can make exponential gains during these bull runs and you can preserve all of your capital during the bear markets. And then you have all your money ready to deploy when we enter another bull run. So, it's overall going to work out much better and it really doesn't take that much time. I mean, I hop on my computer at 6:15 a.m. and I could easily get off my computer at like 7. I usually stay on until 7:30 and that's it. And then I check it at 12:50 p.m. I look on there, see if I have to sell anything, and that's it. So it's a total of about an hour a day, and you can make exponential gains, like exponential. The amount, like, you can outperform the market 10x both ways, right? On the way up, I could get, if I was actively trading this whole time, I can confidently say I would have got 200% in the last year. And then on the downtrend, right, we're down 20 the market's down 20 something percent, I'm down 2%. So on the runs, I'm 10xing what the market does, and on the declines, I'm losing a tenth of as much money. I mean, it seems too good to be true. It's not. Like, I'm telling you. And in my group, I tell you exactly what trades to take. I tell you exactly how much to risk. I tell you exactly when to sell it. I tell you exactly when to buy it. I tell you when I'm buying it. I tell you what what percent I'm risking on the position. I mean, I give you all the stocks I'm watching. Like, it doesn't get any easier. It's like you just have to be willing to put in the 30, 45 minutes a day to actively manage your money, where you can grow your account 200% in a year or more. And of course, I can't guarantee you, I can't make a guarantee because I don't know what the market's going to do. But what I can do is put us in the right spot at the right time, right? And that's basically the goal. Is I'm going to teach you the strategy, I'm going to give you the mindset behind it, and I'm going to place us in the right spot at the right time. And when the market goes up, we're going to do very well. And when the market goes down, we're fine. Nothing really happens. So it's like it's a win-win scenario, right? Because not trading is just as much of a trade as trading, right? Because right now I could be forcing trades. I could be taking 10 trades a day and losing all of them, and I'd be losing a bunch, right? And so it's like, oh yeah, I may not be trading right now, but ultimately I am, right? Because if the market's down 20%, I'm down 2%, I'm technically up 18% right now, right? Because most people would be down 20% right now. And so that's the biggest thing, is you just have to know with this strategy, when do you let go? When do you let off the throttle? And it's simple, right here. Market falls below the moving averages. Moving averages are declining. All right, we're entering a bear market. Decrease your risk. Oh, now we're below the 200-day moving average. That's what this purple line is. Okay, things are about to get real ugly, and that's when everything got really ugly. And now from here, I've just been watching it happen. I'm not waking up stressed. I'm not waking up, worried about what the market's going to do, what Trump's going to say. I don't care because I don't have any money in the market. I'm just getting interest on my money in my account. So, I just kind of want to make a video going over, the benefits of swing trading. It's like you can secure all this money versus all these people who have the long-term investments. They're down. They just wiped out a year's worth of gains in a month versus someone who's actively managing their money. You already have all this money and you're down maybe 2-3% and you secured all this money. So you literally basically are selling the top. You're securing all of it, and then on the decline, you're not losing much of it. And then on the way up, you have 20% more money to invest. You're gonna win. Like, it's a win-win. It's a winning strategy. And that's kind of what it comes down to. So I just kind of wanted to cover on that because I don't think people quite understand the power of this, and I want to help as many people as I can harness this power. I want you guys to be able to benefit from this because I'm literally, either way, I'm making the trades, right? I'm just trying to tell people, I'm trying to help you guys, like, look, this is what I'm doing. I'll tell you exactly what I'm doing when I'm trading, what I'm buying, when I'm buying it, how much I'm buying, when I'm selling it. All you have to do is follow along. Like, it doesn't get easier than that. So, if you're interested in joining, please let me know. But, I'm also obviously going to post some free stuff here and there about, the trades I'm taking and things of that sort. But right now, I'm not taking anything, right? The market's not doing good. Why would I be trading right now? I'd just be losing money. I don't want to lose my money. That's my money. So, yeah, I hope you guys enjoyed this video. I know it's for some people who don't really know what swing trading is. You don't know the difference between different types of investments. So, long-term investments, you just kind of buy and let it sit there. So, something like that you would buy is SPY, right? You just buy it and let it sit. But then swing trading is, we typically hold for 1, 2, 3, 4 weeks. Um, and so we trade momentum stocks. We ride the momentum up, and then once it shows it's losing momentum, we sell it and we secure our profits and we preserve our capital in the bear markets. So right now I'm just watching, letting it fall, letting it bleed, and then once it shows strength and shows a reversal, then I'm in and I know when to go full throttle. So if you guys have any more questions, feel free to reach out to me. Feel free to DM me, whatever, text me. I'd love to help you guys. And if you want to join my group, where I literally tell you every single thing I do, and I mean, it doesn't get any easier than that. I give you my watch list, I give you my alerts, I do live trading, and it comes with one-on-one calls so I can walk you through everything. So, if you're interested in that, just DM me, text me, whatever, and we can hop on a call and see if you're a good fit for that. But I hope you guys enjoyed this video, and I'll be back tomorrow.